Hey, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, where every morning we take a quick stock of where markets have opened in Asia and where they may travel during the rest of the day. As we kick off, I just wanted to start with a quick market update from Vandana Hari, who's CEO of Vanda Insights from Asia, Singapore, tracking the markets there, of course, every day. Vandana, perhaps you could give us a quick market snapshot. Obviously, the news of the morning is Brent below 40. No, this is a music introduction for Vandana's market update. They are not there? Maybe not. Okay, let's kick on. Kevin, also in Singapore, Kevin Wright, senior analyst with Kpler. Kevin, welcome back to the table. A lot's changed since we had your insights previously. Clearly, there's been a shift in market dynamics. How do you see it?
I think sorry, I'm muted.
There we go.
Mute's I am muted, sorry. Apologies. Thank you very much.
The Gremlins are with us this morning, it would appear.
They really are. I'm out of practice. I've lost my razor and my ability to unmute myself. So apologies.
You're about 6 months too late to be growing a beard, Kevin. I mean, it's
I'm 6 months too late.
The COVID caveman is yesterday.
I'm following the UK government's lead in being late on every decision.
Okay, here we go.
Anyway, sorry, a little bit of political satire to start us off. But good morning. It's nice to see you again. Thanks very much for having me back. I was just updating myself in terms of where Brent's gone, and we're off $6 since the start of the month, right? And it's all about, well, obviously we don't need the COVID word to be the precursor of every conversation, but it's obviously there. But at the same time, we're still seeing very, very high inventories. We're seeing very high floating storage. And there was an expectation, I think, that by now, we were supposed to start to see a recovery in demand. And what we're actually seeing is obviously an increase in the number of cases in major economies. And with that increase in cases, you can't have the recovery in demand. And I think that's weighing very, very heavily on sentiment. You can see it across other markets as well. I mean, tech stocks that have been very much the favoured child of the year so far have also softened in recent days. And I think, it just goes to show a little bit of a wider dip in confidence, perhaps, in the markets across the board.
Well, I don't know. I mean, Tesla up 600%, correcting by 30, doesn't really feel like a significant change yet, I would say, on that side of things. But Kevin, your thoughts on, have we all misread the demand out of China this year? Rock solid, record levels, but ultimately not consumption.
Yeah, I mean, we've talked about this before, about how Chinese crude imports across June and July were at record levels. We saw congestion around Chinese ports getting to very, very significant levels. And I updated myself again on this morning just to check. And VLCCs in North China are waiting an average of sort of 14, 15 days just to get on the berth. And that really shows you that, the crude is it's been bought and it's been floated or transported across to China. There's no longer any room for it. Now, at the same time, we know that because of looking at Chinese crude imports and Chinese product exports, that there was a significant build in domestic product inventories, specifically diesel and gasoline. And that, I've made this point before as well, that's really just borrowing demand from the future. And eventually that borrowing, you have to repay it. It comes back to haunt you in the shape of lack of consumption and therefore lack of demand when the future becomes the present. And I think that's really what we're seeing. China can't carry the world on its own. And I think that's being borne out right now in terms of the product markets. I mean, look at gas oil cracks. Gas oil cracks in Europe, gas oil cracks in Singapore are at multi-year lows, and there's talk of them potentially going negative. The idea of a gas oil crack being negative is completely anathema to the refining industry.
It's a bit like negative interest rates, a bit of anathema to all of us, but there it is, it's present. John Roper, CEO of Middle East of Uniper Global Commodities. John, welcome back to the table. How do you see this turnaround in markets, this sort of clearly this falling knife? Is there anything there to catch it?
It's. I think it's quite difficult to have a rosy outlook. Kevin's highlighted the fact that we've got a coronavirus which is not under control, certainly not in the way that economists and politicians would like us to think. And if there is market sentiment that doesn't support the use of crude oil or the use of products, then these prices are going to keep falling. And it's very difficult to see how any of this changes until there is a degree of certainty. I think we are going to have volatility around a small range. I don't see the bottom dropping out of the crude market, but it's going to soften and harden, you know, with the whim of global sentiment, health sentiment, I would imagine, because one thing leads to another. If you don't, if people aren't able to recover, then they're not going to use diesel or gasoline in their cars. You know, cargo ships aren't going to use lots of fuel oil because output demand won't be there. So it's a bit difficult to find a really bullish picture in this market. The only other observation, contrary observation at the moment, actually, is that sort of gas prices, LNG prices, have come off their very low prices a couple of months ago, and we're seeing a firming of prices across TTF, Henry Hub, and JKM. Particularly JKM is looking more robust. But it's not stellar, not by any means. But you know, maybe we'll see what happens to gas when we see more of these, when we see more of the reticent in oil markets.
Laurie Haytayan, welcome back to the table. MENA Director, Natural Resources Governance Institute, based out of Beirut. Laurie, do you see it as gloomy as John and Kevin? I mean, they're clearly, after such a roar up in equities at least, and also oil prices have held quite strongly for a while. This is just simply a temporary correction as we soar back to normal heights of kids at school and people back to work. UK now, offices only 20% empty across Europe. Things are getting back. What's your thoughts?
Yeah, but again, our UK office or the London office is not like a full 20% at all. So we gave them the chance not to go to work at all and stay working from home as a prevention to what is coming. So I think like what the other guests have explained, like what we are seeing is uncertainties at a high level. We know that nothing is looking good. At the same time, the economies are slowing down, and it is amazing how you see that everything, because it's connected and this interdependency. So if one recovery happens in one place and it doesn't happen in another place, things won't work. And the economies, if they're not coming back, like this responsible coming back and reopening, we will keep on seeing this. And it seems that we're not going into something very positive to see. And for me,
I mean, ultimately that's the China thing, isn't it? I mean, China is clapping with one hand. If it can't export to somewhere else, then it can't really drive the global economic recovery.
And today, with everything that we're hearing about the stress on the refineries and the glut in the products, again, like a lot of demand, a lot of supply on, and the inventories are full. So for me, it was very significant what we saw yesterday with the phone call between King Salman and President Putin, because again, if we continue with this slow economic recovery and all of these inventories being like this high, so then we will go back to, okay, guys, can you cut your supplies? And cutting supplies, it comes with the whole pressure on the producers. So I think what happened in the call, it was very important to say that on the highest level, it's not ministerial level, it's not the joint committees level that they will meet next week, but on the highest level, there are coordinations, because they cannot be easy on compliance. We've heard about talks that people that were not compliant, countries that were not compliant, they wanted extensions, they wanted waivers to continue producing and then make it up later. I think with all these times coming from the markets and less enthusiastic, more rational, we see that the meeting or the phone call between Russia and Saudi Arabia has a significance, because again, do they want to bear the responsibility of the weak economies or the unsynchronized or not synchronized comebacks that are happening. So very interesting what's happening there to see what the decisions will be.
It's certainly, Kevin, do you think there is any chance that OPEC Plus could look at reversing the August decision to raise production by 2 million barrels a day? It was, although baked in the original agreement, it maybe wasn't the best time to be adding barrels to the market.
No, I think what you say is absolutely right. But again, there was an expectation that we'd start to see some sort of normalization by now. And I think what all of the panelists are agreeing on this morning is that normalization is not necessarily coming. So, Laurie's sort of hinting at the fact that we may see a very, very high level agreement between Putin and the kingdom, and that will really dictate what the Joint Committee does next week. I think, I don't think a production cut is inevitable. I think it's definitely on the table for discussion, because if we carry on as we are, well, prices are already falling, and those countries that are dependent on oil revenues are starting to hurt again, and so they will start to really reconsider the output.
John, I wonder, is it really, we kind of swing different sentiment week to week, whether it's a demand sentiment or a supply sentiment. And if demand isn't providing the engine, it comes back to supply, and perhaps we're now in a supply sentiment window where the overproduction by the OPEC laggards and perhaps the timing of the OPEC Plus increase needs to be revisited. What's your view? Would that be a sufficient move, do you think?
Well, sorry, Kevin.
Go ahead, John.
Go ahead, please.
Sorry, who would you like, Sean?
Go ahead, John. Yeah, that was you.
Sorry, Kevin. Look, let's not forget that there's still quite a lot of crude oil in storage. And whilst you've had, drawdown of stocks, I guess since June, at some point, Kevin's already highlighted, the future will come to haunt you very much in terms of the present, and you can't keep producing unless you're going to fill all those inventories up again. You're still going to have a softening market. I mean, I think I'm right in saying that we've seen OSP prices down. This is definitely a
lowest levels since 6 months or something.
So it's producers are going to want to try and keep hold of market share. That is quite clear. But I think OPEC does have an issue in that it really has to have compliance. It's really got to stress compliance. If it's not going to take more oil off the market, and I don't know how palatable that is. I really don't. Vandana,
if you're there, you want to give us the market update? We had some technical issues earlier on. Vandana?
Hi, yes, good afternoon, Sean, and sorry about earlier. We've had a very interesting start to the day, so I would say keep your seatbelts on. It has the makings of quite a volatile day. Of course, Brent slipped below the key $40 per barrel psychological mark at Tuesday's settle, and the big question uppermost in the minds of everyone now is where and when is crude going to find a bottom? It's been trading mostly in the red, about 20 cents below Tuesday's close as we speak now. I have interestingly seen it flitting just marginally into the green now and then. And that corresponds exactly when we see the US stock futures flipping into the green. But the US stock futures and the VIX, which is the fear index, have also both been flitting between the green and red. So really hard to say if it's a 50-50 chance whether crude settles even deeper into the red today or whether it finds a bottom.
Well, I suppose a lot will depend. Thank you, Vandana. A lot, Laurie, of that will depend on really, in some ways, where equities go, or where the sentiment in US. If China isn't offering the confidence that we have relied on it over the last few months with record buying, then the US is really the place. And at the moment, equity markets in the US don't seem to be offering much confidence.
Look, I think the enthusiasm, like what we are seeing, it's like the enthusiasm that we had following the COVID, and believing in the humankind, that after every fall there is a rise. I guess we lived around that, and there
It's
were
a good
signs
Disney
like,
movie, you know. You gotta have the Hollywood ending here. Where's my Hollywood ending?
Exactly. Where's the hero? So where's the hero? The hero doesn't die after like 20 shots at his body. He doesn't die. He rises again. So what we are seeing today, it's that scenario. Like, we had so much sentiment, positive sentiment, enthusiasm, and all the indicators that the markets will pick up. There were signs of market picking up, and today we're seeing that technology, when technology is down, everything is coming down again, right? We saw some of the articles in the digest today. Technology is down, we go down with it. So it's very significant.
I mean, it is in some ways, I think, you know, a slightly glass half full or half empty, depending where you see it. I kind of feel a little bit more half full, in the sense that, you know, the equity markets were just running so far away from Main Street, it made everything seem distorted and you know, illogical. By pulling back a bit, everything can feel a little bit more practical, and you can start to get your head around fundamentals. Laurie, go ahead.
Yeah. So one thing, just like to add, I think we talked about the future, and today is the future, where we might have second waves, where we have uncertainties. People are trying what the new normal is. So it's like we're trial and error. Like, we're trying, we open, then we close, we go back, we put our feet into the water, cold, we go back. So I think, and this is what we're feeling, like there are potential for the growth, etc. But it's slower and slower. So that's why we're going back to the supply, as you said, and we all said, we're focusing back to supply to correct the market. But I think the reality is, like, as we said from the beginning of this COVID-19 pandemic issue, we will live in a low price world, and everybody has to accept that. We were talking about 40, 45 until 2021. Even, like, we are saying that, like, whatever happens, even if everything happens, we're not going back to pre-COVID situation until end of 2021. So this is the reality now that we are living in. So this is the future we were talking about, and this is the reality. We have to accept that whatever we do, even if the markets pick up, even if the stock exchange, whatever you want, so we still have this problem that persists with us. The pandemic was very disruptive, and this is where we're going, low oil prices.
Kevin, it does feel like, to a certain extent, the demand recovery has a limit to it, that regardless the stimulus, regardless the price, you're just not going to get people on an airplane, enough people, you're just not going to get enough companies to get people back to their offices, etc., that there's a limit. What about in Asia? That seems to be the narrative in the West. In Asia, it looks a little bit better. What's your sense that the Asian countries beyond China can provide some demand growth?
Yeah, that's again something that we've looked at quite significantly over the last few months. You know, it varies quite widely across the region, in accordance with really the response to the pandemic and how to contain cases. And if you take two extremes of the spectrum that we looked at, if you look at Vietnam, where the response was very swift and very strict, military on the street imposing or enforcing the curfew, we saw significant demand destruction in February, March, and April. But because of that strict and robust approach to the crisis, they were then able to sort of limit cases, and demand started to come back. Now, that was the story until August. And obviously there's been an outbreak in Da Nang in the last couple of weeks, or the last month or so, that's meant that there's been a sort of partial lockdown in some of the major demand centers in Vietnam. So we started to see demand come down again. Now, the other extreme of that spectrum is probably Indonesia, where the response to the pandemic really was very, very soft, was fairly lax and fairly relaxed, I would say. As a result, demand stayed relatively strong. Imports stayed relatively strong across, you know, the sort of the main lockdown months for most of the world. But because the response was so weak, we then saw a flare up. Indonesia has, I think, the second highest number of cases in Southeast Asia, just behind the Philippines. And so what's happened now is that the government has had to be a little bit stricter, enforce a stronger set of sort of measures and so on in order to contain the virus, and we're seeing some demand destruction there as well. So the recovery in demand that we were all hoping, and that Vietnam seemed to be suggesting was going to be the case across the region, has been hampered somewhat by a resurgence. And I think, you know, that's going to continue. The Philippines, as we know, was also very strictly locked down into, you know, during March, April, May, June. The restrictions were eased. We saw an increase in demand, transportation, industrial activity started to increase, and then suddenly Manila gets locked down again, and we see a drop off in demand. So it's a very dynamic situation, and it's hard to say, you know, where that really ends. It carries on for now. Governments have to make these decisions in order to protect public health. And if that means you see demand destruction, then that's what we're going to see.
Well, you wonder where that compromise is in this sort of COVID 2.0 we're seeing in India, which is, I think, only the tip of the iceberg in what's being reported. It does feel a country like India is got a very, very big problem on its hands. Let's go to the survey question of the morning and see what the room's view is about what OPEC may or may not do. There's no indication that this is even being considered, but nonetheless, would it be a recommendation? Would an OPEC announcement to reverse August oil production hike of 2 million barrels per day be enough to send Brent crude oil prices back up to the mid-40s? Even if they did it, would it be enough? What's the view in the room? Inevitably, the increase in August wasn't 2 million, although that was the official quota. It was only 1 million at the end of the day. But would a reversal of their decision do enough to get prices back to the mid-40s? And let's get a vote on that, everybody, and then go to closing comments to outlook for the week ahead. John, what would you think be watching? Everything seems to be pointed towards the US presidential election. Anything else out there for you to see?
Oh, I'm watching virtual gas tech.
Virtual gas tech, well, of course. I mean, besides, now that the Kardashians have been canceled, it's virtual gas tech. I mean, that's the obvious default position.
Well, you know, the Singapore gas tech's been delayed until next year, but the virtual conference has a lot of very good commentary in it, and some very relevant commentary. And it's a shame it's not open to a much wider audience. But yes, we're clearly following that. I think this idea that
were you indicating earlier, John, that there is a new narrative emerging for LNG separate from the oil story?
Look, I think, you know, let's not too excited about it. We have we've seen LNG prices and gas prices firming, and again, I think it's firming in the context of where demand is. There's been the opportunity for longer maintenance. You've seen the Koreans, take out their nuclear power. You know, there's the ongoing dialogue of coal substitution. There are specific reasons for it, rather than global health. I would suggest.
Okay, Kevin, your thoughts for the rest of the week? Of course, we have inventory numbers coming out of the US, whether they'll have any bearing.
Yeah, and obviously production as well. US production's been steadily falling. We're down below 10 million barrels a day again. So I think the stats this week are going to be very interesting. They always are going into September, right? We've seen the end of a very lackluster driving season, which, again, going back to the question about demand, right? It's all about demand. So for this week, yeah, I think the stats are going to be very significant.
I mean, maybe this volatility, Kevin, will be positive. I mean, in the context for OPEC plus perspective, that it maybe discourages shale producers from getting back too quickly when there's still this level of uncertainty around price.
Yeah, undeniably. I mean, obviously, the technology within the shale industry continues to evolve and continues to improve, and we hear about break-even levels falling in terms of WTI prices and so on. But I think you'd be foolhardy to expect a rapid return. You know, if we get down below the sort of 36 and 37s, the WTI is at the moment.
And Kevin, I would suggest also that, you know, you've probably got a real concern about debt that's being carried in this low environment. If there's no hope for the future, and I like the word hope, you know, there's going to be a sense that that debt could be called in, and that's going to cause even greater problems in the US oil patch.
Let's
Yeah,
go
absolutely.
to the survey question result and then give Laurie the last word. Would OPEC's move to reverse its increase be enough to push prices, Brent, back to mid-40s? 2/3 yes, 1/3 no, more or less. It'll be interesting to see if it pops up as a consideration, Laurie, as a final word. We didn't even talk about the East Med yet. Seems that that's all sorted now. Libya, Turkey, everybody loves each other.
So yeah, I didn't give you the
I need my East Med fix.
exactly.
You know?
I had to do that at the beginning. But look, quick about the East Med. So now the summer season has ended. So all the naval exercises and all the macho activities have almost slowed down. So now we go back to negotiations, right? So the French is meeting the Greek this week, and then the German negotiations activities or initiatives are on the table. So now, because as winter, we're going into fall and winter, so we go back to closed rooms, warm rooms to do discussions and to think how to solve these East Med problems. So there are tensions, but I think they're calmer now and trying to find solutions. But this will stay, and every time I'll attend the daily the program, I'll give you a summary of what's happening in the East Med. I'll do that. But
Sure.
so about the future, you see again, like I think we're going back to put pressure on OPEC Plus. So this is why it's interesting to see all these phone calls that will be happening on the highest level between the leaders of OPEC Plus, because again, everybody will be turning to, because with the elections in the states, etc. So everybody will be turning to the supply people, like, guys, can you help us put together this mess that we have until a vaccine is.
Well, we certainly saw Saudi Arabia and the UAE in June providing extra muscle to the OPEC cut. They may look at doing that again unilaterally.
Look, but again, like they can do, but again, there is a lot of pressure on them as well. As you know, like they are dependent on the oil and gas, so they cannot keep on having whatever they do. If whatever they do, we'll still have low prices plus lose market. So I think they will say like, no, we want to stick to our market and live with this low price situation.
Okay. Well, listen, let's wrap it up there. Just to close out, we have our halftime talk feature interview this week with long time OPEC watcher Anas El-Haji, talking about OPEC at 60. For those of you who weren't paying too much attention, OPEC turned 60 this month. And so we sort of dived into that subject. Where is it at, what does 60 look like now? And I thought one of the most notable things he referenced is sort of that we're now in the Prince Abdulaziz era, in the same way that there was a Yemeni era and there was a sort of a Naimi era, and there is a definitive Prince Abdulaziz era emerging with its own sort of set of characteristics. Anyway, 30 minutes worth listening to when you have some time. Thank you, Laurie. Thank you, Kevin. Thank you, John and Vandana, for popping in with the market update. And for everybody else, have a safe day, economically productive one, and we'll catch you again later in the week. All the best. Thank you so much.